Hello traders, Gary Wagner here, just after 1 o'clock in Honolulu, 7 o'clock in New York. It is Monday, October the 5th, 2020, and this is the Daily Report for Gold and Silver. It was a combination of dollar weakness and optimism regarding an upcoming stimulus bill that some say will get passed by the end of the week. We'll have to wait and see if that does unfold that way. But we did see a nice boost in pricing to both gold and silver. We'll take a look at our upside targets in just a minute, but first, to the price board. A combination today of dollar weakness and optimism regarding the potential passing of a fiscal stimulus bill moved the precious metals higher pretty much across the board. Now, partially, dollar weakness was responsible for today's gain, but not fully. In terms of the spot pricing, it was about half and half. We're looking at December futures. We, of course, went long at 1890. The market is currently at 1860, and that's putting it up $11 on the day. When we look at the high, that came in at 2490. It is effectively a closing price above, call it 1920 to 21. That will allow me to look at the next level above that. Right now, we still do have some minor resistance at that particular price point. When we look at Forex or spot gold, that gained $14.40 at 1931.10. Silver also had a nice gain of about 2%, 49-cent gain at 24.52. And lastly, the ETFs GLD and SLV, 179.41, up 87 cents a share for the gold shares, and the iTrust Silver gained about 49 cents at 22.62. There's no doubt we saw respectable moves in the precious metals, gold and silver, Forex gold, as well as the ETFs, GLD and SLV. This first chart that we're going to look at is a dollar gold chart with the US dollar on the bottom and gold futures on the top. We've looked at this on a couple of occasions, but what I'm finding interesting is we continue to see this direct correlation. Even though dollar weakness was only responsible for part of the move, we can definitely see that we are moving lower on the dollar and we are moving higher on gold. We are currently trading at 1860. We've got a little bit of resistance at that former all-time record high, and then above that is 1941. So that's really the mark that we want to look at. And the other thing that we want to be very conscious about is what is the dollar doing, because that has been such a great influencer in terms of current pricing. Traders, I am certainly happy to see today's gains, because what it really confirms is that as the market hit this apex of our pennant formation, we were wrong about the way that it broke, but what we did get was really a perfect V recovery in that it hit the 100-day moving average, and at the same time, the 38.2% Fibonacci retracement. They occur roughly at the same price point, and we have seen it move off dramatically from this particular area. That tells me that we are probably in an intermediate fifth wave. And if that's the case, we'll do a projection in a second, but before we get to that, let's look at the different roadblocks that might appear along the way. So we have effectively broken back above 1900, and that to me was a very, very significant area to break above. Now, beyond that, you have this confluence, once again, meaning two separate technical studies alluding to the very same price point. And you're getting that with the 50-day and the 23.6% retracement. That occurs roughly at 1938 up to 1952. And that is the particular target I think that we could see gold pricing achieve. If it barrels straight through that, we'll talk about our next level. But if we see it come to this level and find some resistance, that might be our point to pull profit, because traders were in below 1900. So I think we've got a significant trade. We will look to move stops up over the next couple of days, now that there is some breathing room between our entry price and current pricing. So maintain your long position and look to trail the stop up later on this week. And traders, we do have a similar scenario in gold in terms of where it found technical support. We can see that the lows that came in here correspond once again to a conclusion of a fourth wave. It also corresponds to the 100-day moving average. However, unlike gold, it doesn't really match up in any way to any of these fib numbers here. I do see support at $23 per ounce. That is the 38% retracement. And then in terms of resistance, 25.75 to 26.13, and that corresponds to the 23% retracement along with the 50-day moving average. Traders, we will look to move our stops up in silver later on this week when we move our stops up in gold. Lastly, I do want to revisit our daily chart. We talked about different support and resistance levels, but I want to look at the big picture. And what the big picture is telling us that at the conclusion of this long fifth wave, we could see gold breach $2,200 per ounce. Now, traders, I'm not looking to see this happen as one move. We could get something like this where the market moves up just past the 50-day moving average. That would be a wave one. We would get a correction. That would be our two. We'd have our longest wave, our wave three, our wave four, and five would conclude there. In terms of a time parameter, it is possible that we see this by the end of the year. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the next daily update and review. Bye-bye.